In the aftermath of the Saudi Arabia drone attacks, everybody wants to know, where is crude oil headed from here? The reality is, it might be going nowhere. In fact, we believe there's a chance that it sticks in a roughly $10 range between about $62 a barrel and $52 a barrel. If it breaks outside of this range, then things could be interesting. But in the meantime, we expect it to be relatively quiet. The average Joe likes to believe that there's always some big story in crude oil. But usually those stories are simply short-term themes, and they rarely drive prices. In fact, if everybody's talking about a specific fundamental story, the market generally does the opposite. You might remember in 2007, everybody was talking about peak oil. Now look, prices dropped from $150 a barrel down to the 30s, and we've been back and forth a few times, but ultimately crude is a heck of a lot cheaper today than it was in 2007 when everybody thought we were running out of oil. We like to look at market seasonals. According to our friends at MRCI, WTI crude oil futures have a very strong tendency to put in some sort of a top in mid-October. Sure, we're in late September now, but it's important to note that the seasonal top is looming in the next week or two, and seasonals aren't perfect. Sometimes the seasonal move occurs early, sometimes it occurs a little bit late, but it usually, not always, but usually does occur. With that said, it's quite possible that the rally that we saw on September 16th after the drone strikes was the high of this move, or if not, if the market does muster some sort of attempt at a retest, we think it will probably be short-lived. We also pay close attention to the COT report, which is the Commitment of Traders report. It's released by the CFTC each week. The CFTC is the Commodity Futures Trading Commission. It's a regulatory body in the U.S. According to this report, speculators are already largely net long. Now, we're not anywhere near record net long positions, so it's not like there's an extreme position, but what we're viewing is most speculators are already long, and so we wonder if the buying power is relatively limited from here. Specifically, as of the last report, there were about 427,000 net long positions held by large speculators in crude oil. Large speculators are assumed to be the smart money. They are traders that have sizable accounts and are holding large positions. We've seen this figure peak at over 700,000 in 2018. So again, we're not at extreme levels, but we are in a situation where most people are already long, so it should take a very strong fundamental story to push prices dramatically higher or more importantly, to hold prices higher. We could see spikes like we've seen in the last week or so, but those spikes will probably fail. We have a hard time imagining crude really getting much above $60 to $62, at least for this cycle. Again, with seasonals coming into play, which are bearish, and most speculators already long, we believe technical resistance in the low 60s will probably hold. If you look at a weekly chart in crude oil, it's evident that although the volatility we've seen in the last week or two is relatively high, in the big picture, we're seeing very low volatility in crude oil. In fact, the volatility is contracting, where the market is forming a wedge pattern in which currently the resistance area is around $62 a barrel and supports around $52 a barrel, but the market is extremely comfortable in the mid-50s. Some of the technical oscillators that we look at in crude, such as RSI and Williams percent R, are suggesting the market is neutral. There really is no directional bias. So the way we're looking at things is, unless the market breaks above 62 or below 52, we really don't have a strong directional opinion. If we had to pick a direction, we'd probably look for prices to head a little bit lower. A breakthrough of 52 would probably lead to a sell-off into the low 40s, and we think that's a more likely scenario than a break above 62, which would push us up into the mid to low 70s. So in conclusion, we really don't see any reason to be overly bullish or bearish at this particular venture. We're just in wait-and-see mode.